We're looking for defensive moves. There are no defensive moves in the market that are super considered, but we'll look at some rotation that did start up over the last 24 hours. Let's move over to notable options. And notable options was NVIDIA. NVIDIA found big bid. We saw a lot of calls coming through on this one. If we scroll through, it was really semiconductors finding all these last kind of moves here. And some big moves in the semis. Again, weakness here in a lot of the stocks that have been kind of finding all those bids. The Apples, the Microsofts, the Metas, they're weakening. And you can see that with the chart that I showed you at the start of this video, but also by this. I'm interested to see how Target starts trading. That's, of course, potentially deep value. And it had a 3.5% day. A lot of calls coming in this, 5.78 times average volume. Let's now move through some of the major stocks. Here are the put-call ratio spreads between the main ones. Interestingly, the NASDAQ actually still gets lots and lots of puts on it. 64.6% puts. That's a big switch from the last day. Is that some large player getting a huge put in the markets and we just can't see it yet? Let's have a scroll through. Of course, the SPY had all the 0 DTE action on it into the Friday. You can see here the calls 440, 436, pushing it through. Then we go down. The first Q is actually a put. Then it's a call. So the first Q on our list here today is a put. Then the third one is a put. Then it's a call. Then it's a call. Couple of puts there. Any notables? Not really. There's no long-term puts that we're really seeing here that have been pushing in. But interesting to see the Qs have that big put ratio on it in comparison to the calls. It could be the beginning of something there. First time we've seen that in a little while. Let's move over to the individual stocks. As we mentioned, NVIDIA was getting strong buys. 0 DTEs again at play here. SoFi getting its final 10 strike. That's a big deal. I personally think it's kind of over for that stock getting into that level, but certainly one that was running. Tesla, NVIDIA, KO as well coming out here. And as we scroll through, of course, they were the mains. AMD, most of the same names that we've always seen in these top lists. PLTR getting a little bit of calls, but I think that's kind of topping off. And Intel getting some big positions here. They're not actually short-dated positions either. So this is like the one we saw the other day, the 38. Another strong position here for 40 on Intel. Looks like it's really going for it. Let's move over to expectations now of the economists moving forward on what the Fed's saying. And you've got 64.5% expecting a rate hike now in July. I guess the economists were right and we were wrong, yeah, when it comes to our expectations. If you go to September, we push through to September, you can see they're a bit more confused about what's happening. They think it'll be at 25 basis point hike, about 11% believing in the Fed, I guess, with the 50 basis point. But interesting to see their Fed projection tool. Let's move over to rotation. What's going on in the rotation world? Well, not that much. Basically, it's just semis, XLK. But notice the last 24 hours did have some of the defensives holding up a little bit better. Healthcare was not there, though. But staples, third best, actually fourth best sector after jets on the session, and utilities ending basically flat on the session. If we move over here to the 5-day, it's totally different, of course. Staples, utilities, not really holding up the way you'd want them to. And they're just kind of the middle of the pack. We need to see the defensives move up while we're getting rotational switch. And that's something that I am certainly watching for in this market. Let's move into now some of the other plays as we go into indices. First up is DX, so the Dixie or dollar index. Yeah, it came into the next level of demand. And we've talked about this gap here. We actually saw a bit of a bid coming through, little under why. You get 2 new rate hikes. That's going to strengthen the dollar, at least for now, if that is the possibility. So the dollar's kind of believing a little bit in it. I'd like to see it get back up to here and then make some decisions. For anyone that did short, though, off that little area in here off the news from the CPI, you certainly got all of your targets that you could have wanted. So very, very nice 3-target kind of move there. Pretty spectacular. Now, 103.25, this is a key level. We'll be watching that very closely here for the dollar index. And of course, as it strengthens, you have to expect gold to weaken. And today's daily close will be a big one for gold. Huge rejection, nasty looking candle, follow through, next move down to the 1910s, 1920s, possible here for gold. Finally, a breakout, obviously looking for the daily close. If you're a gold buyer though, I don't mind this level, this 1910, 1900. So I think it's going to be a pretty strong level to watch for, and we'll be watching it very closely here on the channel. Finally, some moves in those. Oil, boring, still stuck. If you're a buyer, I guess you like it down here, but I'm not too interested in the oil trade at this stage. Just a reminder to everyone that ever calls for a recession, generally you'll never get a recession actually being called until you uninvert on yields. That's US 2-year, 10-year, or 3-month 10-year. We have not seen that yet. Now let's move over to stocks. And of course, Tesla here, a big one. And a lot of you guys love this stock. You actually got, interestingly enough, a gap fill. So if we scroll down here and we go extended trading hours, you'll notice it actually hit 264.99, which is the gap fill. Now, it didn't happen during normal market conditions, but look at that. It just hit that level. I'm telling you, look at that. Oh, damn, right on it. Just smashed into that gap fill. You know, we've had that there for a little while and then sold it off. Now, is that enough to go off? Not really. Do we have a change of trend? Not on a significant time frame. We're going to need to take out 242, 13-ish. And once that gets taken out, of course, you do have the gap up. Let's say we come down, do something like this, then gap below. Ooh, be nice island reversal. Don't try to predict this one. It's still got 0 DTs all over it. It still could go $300. We've just found what I would call a good point for a turn to occur. Apple continues to be lackluster, has not made a new high while the market's been steamrolling ahead. Again, just showing us big stocks are struggling. Microsoft's the same, just kind of floating around at these highs. Double topping, that's certainly something I've seen a few people discussing. A double top often ends the trend. Have we seen it? No. Could we see it? It's a possibility. Another, speaking of double tops, is the DAX. You can see here the topping, the lows. Could we see it? Absolutely. Could this first bust higher and then move down? That would give us a Wyckoff distribution. At this point, the trend is still up and it has not been broken. XJO's found some bid thanks to, I think, the copper bid and also maybe higher interest rates in the US helping out the commodities side of things for now. And you can see here that it's basically just stuffing around on this one. A new low under 70.80 and a close should open up 69.50. And if we get above these highs here, I've marked 7,300 on my charts, then we're probably going long on the Australian market. But it's at a critical level. You can see here, I still probably remain bearish biased at this point. Let's move over to the US 2000 and the major indices. New high coming on down. Weak sector over the last 24 hours. Came to our most trade zone. Then it's come back down. We know where our demand is. Don't be tricked. It's not that one there. It's this thing here. And if that gets taken, that's probably a swing trade, actually, and very interesting depending on how that trades. I'm excited for the next 24 hours, actually next 48 hours, and hopefully you guys are as well. Let's move over to the Qs. Again, so many gap fills below. My goodness. More than I have ever seen, I think, in a rally. So that really shows you mean reversion should be coming. Again, what mean reversion is the reversion to the 20 moving average. Generally, I like to use a weekly one. That's the one that most people use in the industry. Let's move over to the US 500. Actually, we'll use here. We'll go US 100 first. Yep, US 100 futures. New high formed. Interesting how it found this level. So we talked about potentially some weakness here. You would have lost that short that you made a place there with this bit of before the news. Then it sold off, which would have looked frustrating. Then it rallied straight back up. Clearly, we have the demand zone now, which is good because we'll know if swing trades are potentially being activated to the short end. Very hard to stop this freight train. And at this stage, it obviously came up after Jerome Powell's speech, which is pretty normal. Then we usually get a slide after that one. SPX filled the gap. Cool. That's pretty cool. So we can close that one now in terms of where it did. It hit the gap. It's actually extended very quickly here. So the SPX has been on an extreme move. It obviously sliced that extreme zone number 2, didn't even get a turn there. We've found the top, which is the top of the golden pocket. We've hit the gap. The NASDAQ's actually at better resistance than the S&P, and I'm not discounting the idea that we could get into something around the 45, 50s. It is possible if this trend wants to keep extending. You have to expect the unexpected, but let's take a look at after Jerome. So a few people in our private community were angry about this because they were like, why didn't we take the lows? Yeah, I agree with you guys. It would have been nice. So we didn't take the low. We found that. That's clearly the demand. We did instigate potentially a first style or first time frame change of trend. Technically, you'd be in on that and short, and at this stage, slightly up on the short. Again, because you're counter trending, it's a very tough trade. You only win around 50% of them, so you have to make them pay pretty hard, and you've also got to get good break-even levels in. So at this point, it does look weaker than it looks strong on the small time frames, such as the 15-minute. If we get a new high, though, it could go blitzing, and it might even put another 100 points on. So you've got to be really careful about this. No swing trade, no change of trend, but we do know where the big wicks are. This was the initial purchase. Look at that buy the dip, reflex going in the market. You can really see the power of this little red box level here. And I'm waiting, I'm watching. Certainly very interested in the next 48 hours. And the reason why we're so interested has to do with maximum pain. So, of course, we know options are expiring, 5.5 basically million of them, trillions of dollars at stake here, and realistically a maximum pain that's still very low in comparison to the current price. So it's sitting at 415. We're sitting at 437 at the time of recording. That opens the game 2 shorts coming through here. It hasn't worked the last 2 months during OPEX. Before that, it's been pretty efficient. So again, if we see the activation, the right signs, it's possible. Do not ever use one reason to be in anything. But you can see here the calls are coming through. Obviously, there's some exciting levels, 420, 410, 430. All of these are certainly points that you could see the market gravitate towards. It's hard to see the market wanting a higher point at this stage, but again, anything can happen. Price action is still bullish. Let's move over to Bitcoin. Now, this is where weaknesses come in. Bitcoin's actually doing the right dance, and that dance is down. So it's moving into that 24,000 that we've been talking about for a while. Pretty big daily close, new low. Certainly looks weak. Rallies you would think are being met by sell demand. If it does take out, let's say up here, then it's going to reverse and probably look towards the bull end. But it's reflecting really 2 things. Firstly, of course, they're getting, the whole market is getting a lot of FUD on it. So there's a lot of problems there. But I think the second thing that's really interesting is that we've got weakness here in what is technically usually running with growth stocks. Bitcoin's just not doing that. It looks weak. I think 24.2 is certainly possible here. We've been angling for this for like a month and a half. So yeah, it's finally coming down, which is kind of a good sign. If you're looking ahead for the news here, you can see that you've got a little bit of news still coming through. Retail sales, core retail sales coming 8:30 a.m. June 15th. That might be pretty important. Then you have ECB and Bank of Japan and the prelim UOM consumer sentiment at 10 a.m. New York time on Friday. So still a lot of news to go this week, but now the focus turns to options. And more importantly, when the VIX hedges are off, can we actually see a spike in volatility? This is a hugely hedged week, the most hedged week of 2023 left. And at this stage, when they expire, it opens up the floodgates for some volatility to come back into the market. Generally, you won't be able to see it. Now, remember, Thursday action is usually the more volatile day than Friday in these OPEX weeks. So that's what we're going into. If you enjoyed today's video, make sure to subscribe, smash that like button. Massive shout out to each and every one of you that does thumb up the video and enjoys the content and posts the comments and all those types of things. If you want to get more involved, of course, there are some free cheat sheets. You can join us on socials. And of course, if you're interested in day trading or anything else that we offer, you can jump over to fxevolution.com. Thanks so much, guys. We'll see you in the next one. Bye for now.